Hello everybody, welcome to Micro Atlas. Today we're going to be discussing the regime change and shift that is happening, the liquidity crunch that is occurring as we speak, the geopolitical tension that is affecting risk assets and macro assets around the world, and finally, of course, the elephant in the room, the rising oil prices and what that means in terms of inflation and stagflation. So we're going to analyze current conditions and give the fundamental point of view. Then we're going to look at the market structure and how is that confirming that point of view, and then our future assumptions and speculations on the market on what might happen. For example, what are key levels that oils we could look at? What are the 2-year yield and 10-year yield, USA? Trends that are going on and what are key areas that we should look for. For example, right now they're about to retest an important resistance zone, and if that breaks to the upside, that means liquidity crunch is going to become more severe, and that will tie in with rising inflation and rising oil prices, and that usually means very, very, very bad times for risk assets such as Bitcoin and even gold at the start, because most people move their investment. Why, when yields go up, why even gold goes down, even though it's a safe haven, even geopolitical tensions, periods of geopolitical tensions, is because people start put their money in safe yielding assets such as US treasuries, right? So of course that means there's less liquidity in the market in general, in all markets, and as well as Bitcoin. So yeah, it's an important time to look at yields, and it's an important time to look at oil, because that affects inflation data, and inflation data will actually affect how central banks around the world view monetary policy, and they would go from quantitative easing, which what we were expecting, to more like quantitative tightening, return to a quantitative tightening regime. So yeah, all that and more. First of all, I'm Mo. I'm a crypto and global micro market speculator. I've been in the markets for the past 7 years and was able to turn a small portfolio into 6 figures this cycles. So I hope what I'm going to share today is just my trading notes. Those are my charts, and I hope you can learn from my fundamental and technical view, and let me know your opinions and if you agree or not, or if you want to add something to the theory that we're going to be discussed down in the comments below. Without further ado, let's start. So the first thing I would like to grab your attention is the decision time, 90 days. And this is where Bitcoin should make a choice, right? Break on downward, or usually with this theory is Bitcoin should break downward between this period, 90 days, right? It's unlikely for this theory, right? Maybe other theories, Bitcoin could break to the upside, but for this theory, with current the macro environment, the fundamental view says the downward is highly probable than the upside. So that's the reason. And why 90 days? And why does it not start from the beginning of the consolidation period? Why does it start on 6th of March? Well, that all goes and ties to oil, right? So since the inception of the new regime that was set by when Iran and Israel attacked Iran, and oil price, and Iran decided to, yeah, let's economically hurt the world if you can't hurt American armies. And therefore, oil just spiked to a new price level. So for years, we have been trading between the 70 and the 85, and even dipping below that, right? So the regime was like decreasing energy prices, and that was helping economies to stay afloat and grow, even though they have some problems with their employment data and monetary policy, right? So that was able to boost economies a little bit to the upside. But right now, we do not have that kind of support. You took away that support, and we have entered a new regime. So between the 85, the 70 to 85 levels, it's not the best prices, but that can be usually absorbed by economies if the economies are not doing too bad. But when you go above the 85 level, then you get pressure building up on economies around the world, and usually that would take 2 to 3 months for it to actually head to in core inflation data. And core inflation is the most important. This is what because it does not include energy, right? Headline inflation includes energy, but core inflation does not include energy, which means inflation has trickled down to services, to products, and after that, after you see that that pressure build up in core inflation, then the Fed reacts, but also companies start to react and employees start to react. Employees start to demand higher wages for higher prices because they start to feel higher prices, which is reflected in core inflation. And once employees ask for higher wages, then that's usually the last domino to fall, where we might be the risk of stagflation, which is high inflation and low growth, which is, in combination of recession and inflation, you get stagflation. That's when employees start to ask for higher wages and you have a crippled economy, then you start to increase the odds of such a bad time, right? And the markets will usually price stagflation or recession way ahead of the announcement of such a period. That's why we have to be forward looking and we have to speculate on such events happening and reprice it in the market. Be prepared to enter the market before the market reprices this event before us, right? The markets are forward looking. So yeah, that date is because of 6 March is when the regime or the oil has raised to a new level, which affects, if it stays elongated period of time at that level, then the regime can change and shift to a new regime. So we're in a transitioning period right now. Yeah, so that's around 2 months. This is the bar here, but it can also take 3 months, right? I have 3 months on a Bitcoin chart, but I have 2 months here. Just I can like forward it later if I would like to. But what's worrying right now about oil is we're not only hovering within that pressure building zone, but we're actually transitioning again to a macro stress zone, which is much more threatening to economies and risk assets at the same time. And it also means we don't need 3 months, we might need 2 months or 1 month at that level to actually see economies start to see and feel the effect of higher energy prices. And this is why you're starting to see some positive headlines by Trump and speculation on peace talks. That's why yields started to fall again on the speculation of peace talks with Iran. But I think this is just a decoy to cool down markets. I do not believe that peace talks will work. There were peace talks between Russia and Ukraine for who knows how long now, and those have not worked so far. I believe Trump talks talks the talk but doesn't walk the walk. So he's unlikely to get any deal on the table. He's just been making things worse, even though some things he makes it seem like he's doing something good, right? Another thing to look at is actually USDT dominance. If you break above that range and break the resistance, then that will again put pressure on Bitcoin. Right now we're at a very important time, right? That stacks up with the regime change in oil. If we continue to stay within that zone, I believe USDT dominance is likely to break from here, and Bitcoin is likely to break below the breakdown confirmation, right? So right now we try to retest the rising wedge pattern, which, by the way, usually breaks 60 to 70% of the time downwards, especially in bearish times. This is what we've been seeing. Breakdown. We have also predicted that rising wedge breakdown pattern in the previous one, right? And we made a complete video on the rising wedge pattern and how it usually breaks down to the downside. But when we break down, sometimes we spend some time below that range before we again break down. And that breakdown happens very fast. So the thing, what we can learn from here is we do not need to wait till we confirm below that range, because that's usually half the move is gone. Therefore, I like to build my positions when we start to see confirmations, such as the breaking of the rising wedge. That's one area where I would build my position, and then I would double down again when I see some good retesting. And that's speaking of shorts. But of course, if you're looking at accumulating, then I would try to catch the bottom of the move, because I believe that second leg is going to be where near the bottom is going to be for the whole bear market phase. We might dip below that low that we set next month. Usually, first half of April is time of weakness, so it does align. And if we do not see that weakness by April, then we may be heading for a longer consolidation period. And that breakdown might be just a breakdown of structure, but then we form, sometimes when we break down a structure like the rising wedge, which means 60-70% time downwards, that doesn't mean a full continuation pattern to the downside. That means we might break down and shift to a new structure, right? And that's one risk that we have to think about. So the water is going to be elongated. So one thing with this theory that doesn't make sense is that, yes, there are many pressures building up that we should break down soon, such as USDT dominance, breaking the structure, oil entering a new regime, a new price regime. Here we do not have that zones aligned, but also what we have is the bonds having some more area to continue upwards, but if we reach there and break it up, then that's also very, very bearish, right? But what we're seeing here is almost a breakdown of that level here. Break to the upside, sorry. If you go to look the 10-year, we see a similar picture. We have some more to the upside before we actually break above it, but that would mean a build-up of the continuation before that wick that Bitcoin has, and maybe that full confirmation breakdown of that range would align with the breakup in the treasury bond yields, which means higher pressure on risk assets, including gold, even though it's a safe haven asset, right? Oh, that chart actually shows it as well very well. According to that line, if you draw it that way, we are testing the resistance, and we're just coming down. We might, if you see any reaction on some moving averages such as those, then we might be heading up, and that will align very well with Bitcoin going down, right? So that's structurally, but fundamentally as well, if you think about it, a lot of countries have been on emergency in terms of oil. So the secret here is that predicting how long oil will stay elevated at current levels or even be accelerate to new levels that are worse for the economies. We see Japan, I believe. Yeah, Japan has agreed with Iran to let some ships pass through, and they were paying for that oil in Chinese yuan. So changing world order, sometimes aligned with new regimes. If you're not familiar with changing world orders, that means basically there's a shift in how the global economy and global political system and the reserve currency around the world, all that changes, and the top country also changes, right? We're seeing acceleration. China is really aligning with Iran to shift the purchases of oil from dollar to yuan, and that's bad, right? That's bad for America, and that's bad for global economies, because changing world orders does do economic damage around the world. For example, you're starting seeing, I believe Russia, they have sold more than half their gold reserves or something like that to China, right? That's why you saw the in the first half of 2026. That's why you saw the huge crash in gold price, right? One of the factors. Also, Turkey recently in the first quarter of 2026, they have sold around 50 tons or something, right? So a lot of countries are offloading some of their gold reserves in preparation for war, in preparation to stabilize their currency as well, in preparation of economic shocks. Turkey did it to stabilize their lira, right? Um, Energy infrastructure around the world is being targeted. America is moving boots on the ground near Iran. And Turkey has said if America goes into Iran, Turkey will support Iran if the Kurdish forces were used or something like that, right? So Turkey and Iran, they align with each other in terms of they both do not want because the Kurds to take control or something, right? So they both do not agree with the point that uh, of a Kurdish state or Kurdish militia. America wants to um, arm the Kurds in Iran, and Turkey doesn't like that. So they were like, if you arm the Kurds, we might have to intervene as well. So you're starting to have more pieces being moved around the world, around the board, right? Russia's aligning with Iran, China's aligning with Iran, and Turkey now has joined Iran. While you're having America's isolated, but I think they're powerful enough to take out some strong allies. um, yeah, we're not seeing any form of de-escalation, even if some headlines say that they are. We're rather seeing an escalation being played out, and oil is pricing that accordingly. And the longer oil stays in there, um, the higher pressure you're gonna see on risk assets and liquidity around the world, because higher oil prices means higher everything, higher prices in everything, and higher prices in everything means more hawkish Feds around the world. So Japan was speaking about increasing their rates again. So now you're seeing some type of yen carry trade playing out. Not fully. The first one was a shock when they raised interest rate. The second one, the market did not really react, but we're gonna see the third one was gonna happen. But that adds some form of pressure on Bitcoin's price. And the market structure is saying, yes, I am feeling pain and I'm breaking down some major lines, especially if we have some daily or weekly break below the 66,000 range. Then you see we haven't really closed weekly below there reasonably. That's the daily. So if you see like a 3 day or 1 week candle being closed here, that's a major sign that the market is pivoting and accepting a new price range, that the market is ready to head there. So the probability just increases. Doesn't mean we're gonna head down, right? There could be anything in the world that changes that market view, and you might get another bull short rally, right? Until conditions really shift. So market just reprices current probability of what's going to happen right now based on previous information. But when new information comes around, that means things can shift, right? Uh, but to be a profitable speculator in the market, I believe you have to think probabilistically. And probabilistically speaking means fundamentally and structure wise. So those two can actually, you can use either one of them as well only, or you can use both. I like to use both. I like to get my fundamental view, and I like to see the price structure aligning with that view. And the more we see the price structure breaking levels and getting rejected of moving averages or important zones, then that means that there's higher conviction in that for that direction, right? And yeah, so exactly here we got rejected of the 20-week, 23-day EMA. I like to use the 3-day a lot. If we look at the weekly, not much, not much, but I believe the 200-week EMA is, we're really failing to break above that. We broke above it one time, but we came below it in the next weekly candle, and we're still below it. So that's a major area to break above, and we need to be sustained. But what I see right now is the better support is that 20-week EMA. We have to continue to get rejected from it. So if we reject above it, I might shift my bias a little bit more to the upside, right? But if we keep getting rejected below it, I will definitely stay on the bearish side. And I'm very willing, to be honest, looking forward to get to the 40 and 50K levels. I mean, 40K Bitcoin would be nice to buy, you know. It's not about should we offload our investment and accumulate Bitcoin now. It's about how much value can I get for my money, right? And who doesn't like a good discount? I mean, some people like to buy expensive stuff, right? They like to buy to look rich or to feel good about spending. But I like to buy the cheap stuff. That's what makes a good speculator good speculator. You have to buy stuff cheaper if you could, if there is a reason to believe they could go lower. I do not buy things elevated, right? So Bitcoin, I was buying mostly here. So I bought a little bit here, but mostly I accumulate all my zone here, and that's where I like it. So I don't buy when we're going down and making lower lows. I buy on the next piece of strength. So I like to buy here and here when we make macro local highs. I also bought here, of course, and increased my position here, but that's the last time I ever bought. Most my position was there, and therefore that's the real money is made when you buy here and wait to offload there, right? Like way up there. That's what the real money is made. If you're a market speculator, you have to think about the whole leg move, and that's what I like to do in bull markets. In bear markets, I'm more let's say risk aware. I do not like to hold any position during those phases, so I wait for the breakdowns and I just write out the breakdown and just exit my position there. Similar here, I would wait for a breakdown and accelerate there and exit my position somewhere there. But for accumulation, I would have to accumulate here and write it out, because a Bitcoin is good till 2029, right? Google just announced that the quantum computers could break Bitcoin's algorithm in around 10 minutes. And one of my favorite cryptography professors in uni was telling me the biggest risk for Bitcoin is quantum computers. And that's becoming more of a reality. So if Bitcoin doesn't shift to quantum proof algorithms to transmit information and store information, then I believe it is not safe to hold Bitcoin, even if we love Bitcoin, right? I love Bitcoin, and it's the reason why my whole view about the world has changed. About governments, about money, about fiat, about control, about decentralization. Bitcoin gave me all of that, and I will be ever, ever thankful. But if Bitcoin doesn't prove itself to be quantum proof, then I do not feel safe holding Bitcoins longer than necessary, or when quantum computers start to become a reality. So that's always a risk we have to think about. But for now, the biggest risk is geopolitics, oil, and interest rates. Let's focus on the now. And we talk about quantum computers when quantum computers start to be more of a reality. I hope you enjoyed that video. If you did, please like and subscribe, and I'll see you in the next one. I hope you learned a few things. Bye-bye.